Market is turning its attention to the Fed next week, what we were just talking about, when the central bank meets. Joining us now, Goldman Sachs Vice Chairman Rob Kaplan. He's former Dallas Fed President. If you can hear me, you probably heard Rick, Robert. And I guess I'd pose the same question to you. Do you think conditions have been too tight, just in general, whether it's the Fed or not?
I think they had to be tight going into last year because fiscal spending was so historically high as a percentage of GDP. I think the hope going into this year, before we get to other policy issues, is that if you pull back from extraordinarily high fiscal spending and you get to more normal deficits, not 7% of GDP, but ultimately 5 or below, that should be disinflationary, and that should give room for the Fed to cut. The fog in all this is that we've got other things going on, which are clouding it. But I think the Fed won't do anything in the March meeting, but I do believe they'll be positioned to assess whether inflation actually is coming down and balance that also against what's going on with growth. And at the moment, it's a little unclear. And so they'll kick the can to at least May. But it wouldn't surprise me if before we get to the end of the year, the Fed can take some action. But they still have an inflation issue, which will make them more reactive rather than proactive.
Is the inflation issue inflation that's still in the pipeline, or is it the prospect of tariffs that is causing the inflation? And is it real inflation if it's tariffs, or is it just prices go up while the tariffs are on and they don't stay there forever?
So to your point, there's demand-driven inflation, which I think is some of what we had going into the end of last year, and then there's cost-related. I think the demand-driven inflation, if fiscal spending, in fact, cools, and you also have a drop in labor force growth, which we do. We are sealing off the border. We're deporting people. Labor force growth is going to drop off. Both of those should be, I would think, disinflationary. And yeah, the tariff issue is a cost issue, which in turn may lead to further slowing in the economy. And so I think the Fed might tend to not want to act on cost issues, but sometimes when you see inflation sticky, you don't know why it's sticky. And so they're going to have to just understand better. And right now the policies aren't set yet, which is another reason that they ought to just be patient and let these policies unfold.
Robert, do you think that there's been any shift in the strong dollar policy that we've always had? Do you think that maybe in back room somewhere, maybe in this administration, that a weaker dollar would be something that wouldn't necessarily be that unwelcome?
A moderate dollar. The issue is when you're as highly leveraged as we are, and you need to sell this substantial amount of Treasury supply and growing, you want people to have confidence in the firmness of the dollar. I do think, and I just got back from Europe a day ago, we're seeing around the world a little bit of a capital revisiting and reallocation, potentially to Europe, potentially to Asia, maybe a little risk weighting shift away from the dollar and U.S. assets. I'm not sure how far that's going to go, and it'll depend on what happens from here. But that's why you're seeing a little weakness in the dollar now. But I would think for the United States, a firm dollar, maybe not a stronger dollar, but a firm dollar is critical, mainly because we've got so much Treasury debt to sell. Our average maturities are shorter. You can get away with it if people have confidence in the currency. I'm also noticing gold has had a good run here.
Yeah.
It's another thing people might be allocating to instead of the dollar. I think we have to be mindful of all that.
You're not the first person. The other people that I've asked about that say we want a stable dollar. You want a firm dollar. All these things seem like euphemisms for, we don't really want
a stronger dollar.
Yeah, we really don't want a stronger dollar.
What you don't want is you don't want a much weaker dollar where people are a little hesitant from an investment point of view around the world to allocate to the dollar. Yes, it makes our goods less expensive overseas, but goods shipments is only a small percentage of this economy. We're a service-oriented economy, and also we're a highly leveraged economy that needs capital inflows from around the world. I think you don't want the dollar to become excessively weak in light of that.
Go ahead.
No, go ahead.
No, you first. Oh, that's it.
Please.
No, because mine's frivolous. You go first.
You go frivolous. Go frivolous.
All right, Rob, I have to ask you, I have been fixated not only on what you've been talking about, but that picture behind you. That's a picture, not a live shot, right? Because that guy hasn't budged. I don't think he's breathing.
No, he's real. He's just very disciplined. But no, he's. If he's watching, raise your hand. He probably will do that. No, he's real.
Oh, he's nodding. I see him.
Oh, there he is.
He just moved. I literally have been watching that the entire time.
Robert, he is sound asleep. You need to call Elon Musk.
We've got 45.
You need to call Doge. That guy is sawing logs.
He's outstanding.
If he really was watching, he'd be laughing right now, and he's not, Rob.
He is. Look at him. He's laughing. We got him.
Yeah. There's 45 employees down here in Dallas. No, this place is bustling.
Okay, hold on. If he's watching, look to the left.
His left. Yeah, we saw him. We saw him.
Okay.
He did it.
I did.
There we go.
I take orders. I look to my left. I said, oh, my God, you're not talking
Nice.
to me.
Frivolous and fun. Thank you.
Go ahead.
No, I'm done.
That was it?
That's all I
got. You
got.
had something, no?
I was thinking of stuff, but this is too much fun.
I'm going to say,
Right.
Can I say one more thing?
Yes.
There are three sources of uncertainty that are weighing on people. I'll just mention what they are. One is government spending cuts, but we have to deleverage, and so that's to be expected. The second is there are probably millions of undocumented immigrants here who are part of the workforce who are not sure whether they're going to be deported. I'm hearing from businesses they're more reluctant to go into work and they're not spending. And some clarity on that might be helpful in terms of uncertainty. And then obviously the tariff issue is significant. And in particular, the supply chain arrangements with Mexico and Canada are essential to domiciling manufacturing in the United States and being globally competitive. And so that's creating uncertainty. So this whole package, hopefully offset by regulatory reform and, in addition, improvement in the energy ecosystem. But it's not just tariffs that are creating this uncertainty.